You were listening to chartingwealth.com for Wednesday, the 22nd of November, 2017. Great to have you with us. Everything on our charts up for the day. From the S&P 500 up 0.64%, the Q's way up 1.08%, bonds up 0.32%, and gold up the least at 0.17%. Let's jump first into the weekly chart on the S&P 500. We see after the past week of down movement and really a red spinning top, which of course means indecision, the market was backing up a little bit, as it did for actually 3 weeks, starting on the week ending Friday the 11th of August, and then sort of caught its breath and then started on that 11-week uphill climb. Well, the past week ending the 17th, Friday the 17th of November, appears so far this week to be another one of those breath-catching weeks. And now what do we see going on? Well, we see, as far as price movement goes in our Heikin-Ashi candlesticks, some up movement after the first 2 days. Now again, we have a shortened trading week. What we see is the market is closed on Thursday for Thanksgiving, and then a short day on Friday. Again, those of you who are followers like I am and love the Stock Traders Almanac, please be sure to look at page 104 about trading the Thanksgiving market. There's some great advice in there, but what we see going on so far is some upward movement in price. Now, what's interesting is our indicators, which is what we swear by, those are showing, again, continual bleeding off in the derivative oscillator. And so far this week, the price percent oscillator, which had been going down, is moving up just a little bit on the weekly chart. Remember, the 2-day chart's in a confirmed down move on the S&P 500, so we don't have a trade at this point. We never have a trade when there is an issue of what do we call it? Sort of schizophrenia between the weekly and the 2-day. Why? Because we have to have both the 2-day and the weekly going in the same direction, either up or down, before we look for a trade. Those of you who don't understand, why would you ever buy anything when it's going down? That's when you actually short it. You might buy something like SH, which is the short of the S&P 500. Again, not for a long period of time, but if there's some rapid decline in the market, things are going down, you can actually make a virtual profit. And again, we do virtual trading. We're not a stock calling service. We're not giving you trading advice. We want you to train with us, get good. Then when you combine all the knowledge you've learned from us and others, you can start making your own trading decisions, but not until you make successful trade after successful trade after successful trade. Then you can figure out what you want to do with your own money, but not until then. So what do we see happening on the 2-day chart? It is actually moving up, but still hasn't crossed over on our main indicator, the king of indicators, the price percent oscillator. Derivative oscillator is losing a little bit of its downward momentum so far over the last 2-day candle that finished righting itself at the end of the day on Tuesday. So we do see 2 2-day candles of up movement after 3 2-day candles of down movement, and that crossover going down on the 2-day chart. So we'll continue to watch things. Don't have a trade yet. What's going on the 4-hour chart? Of course, it crossed over in the morning with that strong up movement after really tracking sideways, just getting ready, and then it popped and blew through the weekly trend line, and had already blown through the down trend line all the way back on the, all the way back on the afternoon of the 16th of November. So we'll continue to keep an eye on the S&P 500, let you know when something's ready to pop on that. Now let's go to the Qs. Remember, unlike the S&P 500, the Qs actually has been positive on the 2-day chart and the weekly chart, both moving in the same direction. We're actually going into the 1, 2, 3, 4, 5, 6, 7, 8 week of up movement. Since our weekly vertical crossover going up, we're into the 4th week of up movement. Now, if we hone into the 2-day chart, what do we see? Well, of course, the 2-day chart crossed over back on Thursday the 26th, just before the weekly chart crossed over going up on Friday the 27th, and we saw up movement for several days and then sort of a sideways slide trying to pierce the 2-day trend line. Didn't quite do it, and then moved above over the last two-day candles. Derivative oscillator still losing energy, but the price percent oscillator, our king of indicators, moving up again on that 2-day chart. Now, what we kept telling you was, hey, this 4-hour chart's backing up. When it gets ready to cross over going up, watch for it, see if you can find a jumping in point. Well, that jumping in point was potentially this afternoon after that huge movement up, and that crossover as we went into the afternoon would have been a hard thing to call. So of course, what do we want to do? We want to look at how things look at the opening of the market in the morning around 10:30, not at 9:30 when it opens, but around 10. Remember, idiot hour is that first hour when the market makers are in charge of so many things and go through setting prices. They're given a lot of discretion with the opening of the market. That's why you never place a market order. You never, ever do. You'll always use a limit order whether you are buying or selling. So again, check things out, how things look around 10:30, and if things are still looking good, you can actually look again, or you can wait until noon, until that morning candle finishes drawing, and then jumping in. Again, don't get greedy and don't sacrifice intelligence for hoped-for profits. You won't lose every time, but you'll lose enough that it will kill your results and demoralize you and cause you to say, this is for the birds, this doesn't work, I'm not going to do this anymore. Again, victory goes to the tortoise and not the hare. You have to keep moving. Keep moving forward, keep learning, and I guarantee you it will come. Okay, that's where we are on the cues. Potential jumping in point in the morning, unless you tried to jump in the afternoon after that close. But again, you really didn't have it signified until the end of the day. So again, with that kind of boom up in the morning, you can also be risking a lot that you don't end up jumping in and then seeing things move down on you, peak out. So just be careful. Remember, big jumping in, big up movement on the 16th, where things jumped up in the morning and the afternoon. And then after that, for the next 2 days, things went down. So just be careful. But you do have a certified crossover now on the 4-hour chart. So look for a jumping in point. Okay, let's keep moving rapidly. What do we see going on TLT, the 20-year bond fund? We might have a weekly vertical crossover by the end of the week. Right now, of course, we're in a confirmed down move on the weekly. The 2-day currently is up. And of course, that 2-day crossed over going up all the way back on the 3rd of November. So again, and we have 3 2-day candles. Now that that latest candle has drawn, it is set in stone. So we have 3 3-day candles and a nice 3 2-day candles. Sorry, that makes for 6 days of up movement. We have a nice trend line that we've drawn on the 2-day chart. What do you see going on that 4-hour chart? Again, up movement in the morning, a little bit of backing off, spinning top, some indecision in the afternoon. So keep your eye on things. If we have a crossover going up on the weekly vertical crossover on Friday, we'll let all of you know who subscribe to our text service. Those of you who are overseas, it only works in the United States. Please just make sure to listen to the weekly review and forecast, the comprehensive review that we do over the weekends. And of course, if you fill out either of the worksheets, the daily or the weekly, always make sure if something happens and you're sick, busy with family stuff, you can only do one thing, do that weekly worksheet. Again, all of those things are available to people who subscribe. Go to chartingwealth.com, sign up for free, put in your first name, last name, email address, or just your first name's fine. Email address, and you will receive with each and every market review, you'll receive links to all of the information we have from our daily market, our daily market worksheet, weekly market worksheet, trade worksheet, how to read a stock chart video, and the layout that we use at freestockcharts.com. That's where we are, my friends, on TLT. Lastly, we'll go to gold. Remember, all things being equal, the market tends to move in the direction of the largest chart. That's the weekly going down on gold. We see that things are a little different on the 2-day chart. And just to note, The weekly is crossing over, hasn't happened yet, but we'll let you know if indeed it's sort of been slipping sideways. Wait a second. Wait just 1 second. Okay, the weekly has crossed over, of course, all the way back on the 6th, going down. The two-day, I'm getting my own self confused. The 2-day has actually crossed over going up back on as recently as Friday the 17th. And of course, what we are looking for is to see how things are going to shake out, because we currently have a little schizophrenia there with the weekly down and the 2-day up. We now have the latest 2-day candle is yet another red doji, or red spinning top, means lots of indecision on that 2-day chart, with the little bit of up movement on the day sort of making up for the prior down movement. Look at the 4-hour chart, which again been working well as the market was trending nicely, but then we got to the period starting on around the 13th through about the morning or the afternoon of the 16th, where things slid sideways. That really throws off our oscillator. The oscillators need movement up or down, nice tracking movement where the oscillator works well. When you don't have that, when you have a sideways slide, unlike we saw from the 11th of September down until about the 6th of October, we had a nice down trend where the oscillator worked wonderfully, the price percent oscillator. Our derivative oscillator pretty much too. Then we had a nice changeover starting there around the 6th of October when things bottomed out, and then on the, around the 6th of October, and then things moved up quite nicely. Then they rotated back over going down around the 18th of October. They went down for a while, then up a little bit, then up a little bit more, and then starting around the 13th of November, they slid sideways. Then we had sort of a pop-up on the 17th, Friday the 17th in the morning, and what we've seen happen is things popped up for a day, and now they've popped back down again with a 4-hour crossover going down. Now again, all things being equal, like we said at the beginning talking about this ETF, things tend to move in the direction of the largest chart, which is the weekly, which is down. So again, we're getting toward the end of the year. If gold keeps moving sort of sideways and sliding within the same bounds, it gets harder and harder to figure out where it's going and to make successful trades. So that being in mind, and we've warned about it all year, how the oscillator stops working, how our gold 4-hour chart stops working around mid-December. We're getting to the end of November, so again, be careful, but don't hesitate to practice. It doesn't cost you anything to do virtual trades and to gain expertise and to keep your notes. That's why we have a trade worksheet. You want to make sure you keep your notes so next year you can refer back to how things happened in December of the prior year. And as you keep your notes for years and years, you can start developing your own patterns and trends and your own rules. That's why we so encourage you to keep the daily market worksheet, the weekly market worksheet, and the trade worksheets. They are your trading diary that make you a master trader. Without that, maybe you like the sound of my voice, but I'm telling you, the 10 minutes you listen to us, spend that filling out your worksheet. That's why it's so important. Folks, that's where we are as we end the day. Again, look for this down trade in the morning on the 4-hour chart. See if it sets itself up for you. For those of you who don't know quite what I'm talking about, because the 2-day chart is in an uptrend, remember the uniqueness of our 4-hour chart in gold. It seems to be, except when we have sideways slides, it is many, many times a prescient chart that works over and over again. But we're getting that time of the year when it starts getting quirky. And with the recent sideways slide in mid-November, real quirky. So just be careful. That's where we are as we end the day and go into Wednesday, the 22nd of November. Thank you so much for being with us. Hope you're looking forward to a wonderful Turkey Day. Happy Thanksgiving to all of our friends. Remember, the market is closed on Thanksgiving. There's a short day on Friday. God bless. All the best from the whole team here at chartingwealth.com.